Ladies and gentlemen of the crypto space, we're live on a Monday, December 5th at 12:52 p.m. Not a.m., damn it. I'm late today. All right, it's a good topic because over the weekend, and especially the way market conditions have been, and basically all the time, people are always asking, obviously me, but I'm sure all of you, what am I going to invest in? I say it, I don't mean to be negative with that tone I just took. But the point of it is outside money versus inside money and the perspective that people have about a market. Some people have never invested in stocks. They don't own anything. Some people don't even own a home or don't own a car. They lease and rent in perpetuity. So in those instances, it is extraordinarily intimidating even considering purchasing anything. And that is something that, I've always considered. I think we all consider it. But I was considering it even more so this weekend as friends and family have been asking more and more as the numbers have come down. And that is very typical, as you all know. Numbers come down. Things are a deal. There's maybe a discount. And when I give them my response, the Captain Rational response, everyone's shocked. I'm like, no, no, don't do anything. Don't touch a damn thing. And then I try and give them an explanation of why, a brief explanation, and then I just, it's hard, very hard to talk to someone that's never purchased anything about markets and money. Like literally, you need an education on what is money, what is value, what's the difference between money and value, what does it mean for the volatility of these assets, and how do you handle it psychologically. It's very traumatic when you see the number go down, but you have the same quantity of assets. Did you really lose money? No, you lost value, but you still have the same quantity of assets, which can reinflate in the nominal price point. So these are all, a lot of subtleties, but also definitely immense complexities in trying to talk with friends and family about what we do. Almost everyone who's going to be on the stream today, only 12 people in the stream, and maybe we'll get up to 20 or something in this bear market. But everyone here has been here, has positions, and that's inside money. You guys are inside money. Either you've had money in these markets and you've been experiencing this insane volatility for a long time, or you made money in these markets, and the money you've made in these markets was once very small, and then it was extremely inflated during the height of the bull market, and has deflated. But hopefully everyone is still in profit at this point, and productive assets, as we talk about. But it's really the perspective of the outside money that has been interesting. Like literally, I tell people that what I do. Everyone knows I do crypto. Everyone knows that it's productive and it makes income. But from their perspective, they're like, what do I buy? And I'm like, no, 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 no. This is not a time to buy. And they're like, what do you mean? And I'm like, the price. They say, what? The prices are down. What do you mean this isn't a time to buy? And then I try and start telling them about liquidity and the macro stuff that we talk about all the time. And it's something folks don't understand, and most don't understand that there is a good chance that we have significant volatility in the market, and volatility could very much lead to significant depreciation, especially if there's collateral evaporation, and things need to be liquidated in order to hopefully avoid some sort of liquidation and stave off basically deflation across the globe. I mean, you see the numbers. You see the 80 trill of interest rate derivatives that are questionable with a 1 year that have a 1 year term. So where does all that value? How does those positions serviced with regard to their collateral requirements, especially given what happened in 2022 and the significant depreciation of collateral bond market with a 20+% reduction in valuation? You mark the market, the collateral, and we got some serious systemic issues. So anyway, where was I? Back on track. Like I tell people that ask me about the markets, I'm like, cash is the best investment. Dollars, and they're like, what? I'm like, dollars are appreciating. They're doing better than every currency around the world. Obviously, not right now, because if you look at short-term dollar movement like a DXY, euro, and yen, obviously the dollar has come down significantly over the last 2 months. Is that really 2 months at this point? This is the weekly chart. Let's go over to the monthly. Yeah, it's 2 months. But it looks like it's holding the 10 SMA on the monthly. I'm digressing. I'm looking at the dollar chart, and but this plays into all the reason I tell people the dollar is the thing that's outperforming, and they're like, what do I invest in to make money? I'm like, no, this is not a time to make money. This is a time to be grateful that you have anything whatsoever. A dollar is a dollar, and a dollar services a nominal debt obligation. If you have $1,000 a month to pay on a mortgage, and you make $2,000 a month, you could pay your mortgage. And if inflation goes up and you're able to negotiate larger salaries over time and you're making $3,000 a month, your debt doesn't go up. You still just owe $1,000. So you always got to remember debt servicing is nominal. I have no idea how to tell this to other people. People that ask me about investing, how the hell am I supposed to describe to them that debt servicing is nominal? So in an inflationary environment, the odds are you can negotiate a higher salary, but your debt still the same. In that type of environment, dollars are the king. And as Jeff Snyder talks about recently, controversial as he may be, this has been a deflationary environment from a global currency perspective. So the dollar is scarce. I've talked about it where there's five and change trillion dollars of M0 base money. There's less than 700 US dollars per person on the planet. It's basically a scarce asset. So what happens if we have a macroeconomic shock, collateral starts to implode, mark to market on US bonds, and where does everything deflate to? It deflates from whatever the hell M2 is, the $600 trillion derivatives market, and it deflates basically to M0, the money. There's only a certain amount of dollars that everything else is based on, and it's inflated by leverage. So in such a deflationary impulse, austerity, grateful for the quantity of dollars you have to pay the nominal debt servicing obligations. So what do I tell people? They ask me, what do I do? And I tell them the most important thing to do in this market is to know what buttons to click. And like I'll say when. It's not a science when, but if you know the charts that I look at predominantly, it's basically systemic liquidity. And if we see indications that systemic liquidity is increasing, and we look at the VIX, and we have low VIX or decreasing VIX, you could chart the VIX, as some people say, then you have a period of calm. And in a period of calm and low volatility, and let's hope the bond market, you look at the move, let's look over here, if it loads. I'll get to your guys' comments soon. Bond market options volatility. So move has been coming down. Why do you think the market, the equities market, the risk markets, the crypto space has been going up? Because bond market volatility is down. The VIX is not spiking up. I wrote a tweet about it. People question what creates a bull market. The first and foremost thing is no matter how much is destroyed and how much global macro financial shit is going on, there's countless trillions of dollars in the system. So what does it take for a bull market? It takes calm. It takes a period of calm for everyone to forget all the pain of bearishness, and then it's a momentum. People start to see the depressed prices. Some people start buying. But because it's calm, there's no volatility. People aren't fearing. There isn't risk that's permeating the system. So more people keep buying. So a bull market has nothing to do with interest rates. You might as well be looking at the VIX. You look at the move. You look at Arthur's systemic liquidity. And you look at total liquidity in the emerging market of choice, which is the DeFi space. And when you see not a negative number, you got to see a positive number. That means you have increased capital inflow into an emerging market. And why is capital going to an emerging market? It's not just going in for shits and giggles. It's going in to basically do something, to invest, to buy, to participate, to create velocity. So this is not a direction of growth, expansion, of volume. So this is what I look for, now that I've come to my understanding of the markets as they are, that the next cycle will be very presentable when volatility is low, especially in the bond market, and when Arthur's systemic U.S. centric systemic liquidity index is on the rise, hopefully breaking out above trend lines. I don't know the significance of the trend lines, but that's besides the point. What you really want to see is capital inflow into the emerging market of choice. And that money, that capital coming in, is going to chase opportunity, either chase yield or it's going to chase capital gains. So the problem is it's going to be depressed. Everything's going to be depressed. Activity is going to be depressed because the big boys are not seeking outperformance when 10-year bond is hitting 3.588 or the U.S. one-year bond is hitting 4.7%. Who the frick is going to put $100 million worth of capital on Aave for a fraction of a percent when he could get risk-free returns on a one-year bond, 4.7%? So this is exactly why we see not capital inflow, but what's most surprising is how moderate the pace of capital outflow is. And that's what I've talked about with regard to the remarkable stickiness of capital in the DeFi emerging market. Quite fascinating to see. Anyway, so that's the story I wanted to tell today. I had some more thought. I've never really talked about how to talk to new people considering the space or new people to investing, but I tell people cash. And you wait, but you need to know how to buy, you need to know where to buy, you need to know what to click, and as we know, being veterans of the space, we're literally talking about up-only mode. When capital starts flowing into the crypto space, you get asymmetric appreciation across the board. You see $100 billion move into the crypto space, into the DeFi space in particular. What do you think's happening? Same thing we saw in 16, 17, and 20, 21. You see your multiples. Now, obviously, the coming cycles are going to be different. History rhymes and never repeats. So you'll have that outperformance, most likely. I don't think it's going to be as degenerate and widespread as it was historically. But what you're going to see is the further adoption and solidification of the narratives that we talk about. We're going to see the infrastructure. We're going to see capital flow to the things that are being used, the things that other protocols are using, the things that institutions are wanting to use, which is why I think Solana is still on the radar in a big way. I think there's a lot of things that are pent up, a lot of interest that's pent up because this is, I'm digressing, but this is infrastructure. I mean, literally, you could literally disrupt DevOps. I mean, you don't need servers. You could participate with regard to consensus and run a node, but literally, you're distributing compute. Extraordinary. And the computers that process the compute are incentivized inherently by the network. It's a self-funding, distributed, decentralized compute environment. That's extraordinary. These are APIs. A contract is an API. It's more than an API because it has storage. So it's the entire stack. You got your database, you got storage, and you have your API implementations to process data. So that's exactly what I see. I just see literally servers and DevOps being like, all right, we do the same thing we do. We just write it in Viper or Solidity, and we just have no hard drives, no whatever pods on Amazon, and you just have the contracts, and you know how to interact with them, so on and so forth, and manage and maintain them, and debug them, and release them. And it's a completely different world, and this is just starting. And I think it's very, very tantalizing. Dan's in the house. Ding, ding, a pleasure. Zoidberg, Kazan, Kyon, close your eyes, and you hear John McAfee. Oh, I like McAfee. He's a good guy. He was out there, but, he had a lot of good ideas. Joshua, pleasure. Burden. Got to survive, get your cash, minimize the expenses, and have marketable skills. Yeah, marketable skills. You got to be able to maintain employment. And optimally, what do you want employment to be? You want employment to be your your secondary source of income. That is the ultimate goal for employment. You never should want to not work. That doesn't make any sense. You could pursue entrepreneurial activities, but employment is you got to keep busy. Got to keep busy. It's important for just good psychological health. Um, and cash. This is all cash. Folks, anyone that's new, that's never invested, ask you, the veterans of the space, what do I invest in? You tell them cash. That's the responsible and rational thing to say to anyone. This is not a time to be exploring risk, but this is a time to understand what buttons to click. I always tell people, take $200 and spend it to explore and understand what buttons to click so that when you can and you have an opportunity, maybe you've saved up enough cash and the market is right, you know how to buy. You can't do anything unless you know the sequence of events. Got to be prepared. One curious view, a Sarko, I made it, grateful to have euro dollar stables, right? I mean, it just is what it is. It's by definition a classical euro dollar implementation, especially a CDP. Albeit the fiat-backed stablecoins is that's just a proxy. So the fiat-backed stablecoins is a fungible, portable version of a bank liability. Bank liabilities historically, they're portable. I mean, they're fungible, but they're very different because they're on the bank's balance sheet. They're using the bank's network and system. This is the first fungible and portable bank liability that's not on banking infrastructure. They're not dollars, like paper bills. A bank liability, your bank account deposit, is not a paper bill. It's fungible and portable, but this is fungible and portable in a different way because it's off their system. What are your thoughts on minor capitulation taking us to a lower low? Bitcoin is in a complex situation. Lower low. I think every part of the market is coupled, but just knock-on effects. Obviously psychologically, if Bitcoin makes a lower low, everything else should be trending in that direction. But you've had a lot of capitulation in the markets. I said you had DeFi apocalypse, which wasn't really DeFi. It was all, FTX, well, not FTX, but Celsius, BlockFi, so on and so forth. The whole swath led up to FTX, which took out Genesis. And then you had the Curve on-chain short attack. I mean, come on. If you don't have a flush of all weakness after $100 million on-chain short attack, what else is going to cause the final capitulation? I mean, who else is left to sell after a $100 million on-chain short attack, driving the price down to such an extraordinary level? This is an artificial drop down. I think the lows were in over here. I mean, come on, who's left? Who bought lower than this price? Anyone that held down in the 40s, they're not selling at this price because those are the people that are like, yeah, I know what I bought. But who's left to sell? I mean, traders, but that's the whole point. Traders are just trading around spot, up and down, and taking advantage of the market volatility to capture those spreads. But anyone who's investing, who the hell is in profit? There's no one left because 40 cents was the bottom. I mean, if you zoom out to the monthly, you would have literally needed to buy less than current price, 68 cents. The only time we were less than 68 cents was the first 4 months of Curve in production. In order for anyone rational, you only sell when you're in profit if you're rational. To sell right now, it was bought during the first 4 months of Curve. Anyone who bought in the first 4 months, I don't see them selling. They bought for a reason, and they've held for 2 years just to sell for a whopping 20, 30, 40, 50% return after this incredible capitulation to the downside. This is an extraordinary presentation of ferocious capitulation. Wow. Anyway, that's the deal with, I think, one curious. There could be plenty of broad the fear and depreciative forces by some sort of Bitcoin miner capitulation. Maybe there's some shut down, hash rate starts to drop meaningfully. I mean, how could you stay in business if it's not profitable? So these are some very legitimate questions. Um, it's a little it's a little unsettling how exposed Bitcoin is to traditional finance operations. Just literally just standard business practice. You have debt, you buy equipment, you sell the mining yield to finance capex and ongoing obligations. And if you can't do that, it's an insolvent business. So it's literally a traditional business. So it's a mining operation. So it is what it is, but that's the nature of Bitcoin. It's not the nature of everything else. It's not the nature of Ethereum at this point. Now, obviously, centralization and that whole conversation aside, that has been alleviated. Proof of work is susceptible to traditional business requirements. Solvency. Um, hey, Noah, you responded to one of my last tweets where I was trying to rephrase your ideology. Oh, it's a pleasure. Obviously, I don't recall it specifically, but I try and help the best I can. It's a pleasure. Bill's in the house. A pleasure. It's indeedy. Sarko, what's money? I recommend folks outside inside crypto to read The Richest Man in Babylon, a short read filled with wisdom. Well, there's countless takes, countless opinions, countless uh, uh, books, and countless sources of information that give endless interpretation of what the hell is money. I mean, you know how I define money? Whatever the hell the guy at the convenience store will accept for an egg sandwich. That's money. Okay? So there you go. We'll add it to the list of Noah's definition of money. GURPS in the house. Nice streams. It's a pleasure. Brian, happy Monday. It's a pleasure. Start for a week. I think it'll be a decent week. Only another 90% to go, Randy. Well, we'll see. Um, you know, how do you go another 90% on some of these assets that experienced significant depreciative forces with complete capitulation? I mean, I can see Ethereum. Maybe there's large holders and further fallout from Genesis, but those are going to be sold in OTC deals. This has been some extreme on-chain capitulation at this point. I mean, who's left to sell? So I like those charts when that's what Bitcoin talks about extensively. It's the in-profit chart. So if you want to pull up in-profit charts for respective assets, that is probably one of the most meaningful indicators or pieces of data about the state of an asset is who's in profit. If you got 99% of people who own the asset not in profit, who the hell sells when they're not in profit? So that's an interesting thing to mention. In my opinion, seeing the next push for more blockchain volume would be practical utility protocols in addition to market makers, exchanges as experienced this last bull. Exactly. I mean, literally, you just got to look through market volume. Almost all that information is available on DeFi Llama. And me, I look even higher. I look for systemic liquidity because systemic liquidity is a precursor to market volume. You got to start seeing 100 mil, 100 mil, a bill. Come on. There's got to be money flowing in order to even support increased volume. So this is a bit of a precursor in that regard. Thoughts on future of LUSD? A little disappointed that they're not keeping up with renting votes to finance incentives. But it's a mutable technology, so it will be here. Um, I have a good opinion of Liquidity. I don't have any exposure to it, but I definitely have a good opinion of it. Question: Digibyte did a pre-mine. Do you think that will affect it negatively? No, I think that's irrelevant. I think there's so much that's not understood and so much wasted thought what Digibyte is. Um, the most important thing to understand is there's no reason for Digibyte to appreciate. It's purely a speculative asset. that is filled with predators and miners selling for profit. Because that's what, if you're doing proof of work, you have to sell for profit. So there's a constant sell pressure, and anyone else who's trading it is literally just a predator trying to extract capital gains. But there's no reason for it to appreciate. Decentralization and all the narratives you want aren't a reason to appreciate. Not censorable, not confiscatable, those aren't reasons to appreciate. Value is because someone else wants it. And the biggest value is when a convenience store wants it for an egg sandwich. That's the most valuable thing in the world, because you want a damn egg sandwich for breakfast. You want to have something that you could let me flip the script, that a convenience store owner could purchase from you using an egg sandwich. Flip the script on money is a great way to understand money. I'm not purchasing an egg sandwich with money. A convenience store owner is purchasing money from me using an egg sandwich. Think about that one for a second. So that's probably the most important thing for everyone to get a sense of with regard to old school UTXO chains. So there is potential for enterprise on those chains. I myself talked about this technology. The potential for the technology, specifically Digibyte, a month or two ago. So, I have my interest there. But there's no imminent reason for appreciation. It's not a reasonable investment in almost all regards. It has no cash flow. It certainly is volatile. You can't save money with it. And the future is maximally uncertain. There's no products, no services, no enterprise. So anyway, I'm not talking bad. I'm just talking real. And the most important reason to talk real about tech like that, because the tech is wonderful. The greatest tech in the world is not necessarily a good investment at all. Always remember that. What's your realistic thesis for more capital inflow? Uh, Permissionless lending, leverage, Eurodollars, stablecoins, market making. That's it. That's everything. That's the whole financial system. How many people need to get a loan from somewhere and it's bullshit terms? But on Aave, you just click and you get it because you over collateralize. So there is all the reason in the world for capital inflow when there's an increase in liquidity that facilitate conditions in which people need to do something with the capital. And in this point in time, it's a period of austerity, it's a period of decreasing liquidity. People are really need to be grateful for the amount of capital they have. Can't wait to see how digitization of all assets changes regulators' blockchain, not just for cap gains collections. Well, we'll be here. If you own a locked position, you will be here in 2030. Can't sell it. Isn't that wonderful? That is the biggest innovation, in my opinion. A position that you cannot liquidate. I love it. Without proof of work, Ethereum could not reach its current valuation. Agree. 100% agree. I don't know how to get economic security starting with proof of stake. So systems, causality, and your manifest destiny. It's like systems become what they are because of just the right place at the right time. Ethereum is what it is because it did what it did. You are who you are because of the shit that you did. So there's a good argument to say that you can't Ethereum. Look, there's plenty of proof of stake chains, but Ethereum is what it is. So it's an interesting conversation and argument. Tony, a pleasure. I hope it helps remain rational. It's okay to have a position in anything you want. Listen, it could change the world, but there's no reason for it to change the world. So 0.1% of the portfolio. I always tell you, 0.1% to 1% or 1% to 10% changes everything. But what's the point in taking the risk and wasting money when you could get 30, 40, 50% return on your capital with shit that's basically established infrastructure and building lendiness. So it's cool. I appreciate it. I love it. It's a good part of my start in the crypto space, but I'm kind of here to live my life and make some capital. Bill, also, if I could get one more question. Last question for the day, guys. I appreciate it. What's your thoughts on the chat? Oh, shit. Dude. Yo, GPT. I mean, talking about AI, and you're talking about some serious stuff. And all we're doing is speculating at this point. It's going to change everything. It changes everything. Changes everything. But that to change everything takes a long time to play out. I mean, look, Meta and the virtual everything changes everything. Just because Meta did like shit as a company has no implication for VR. I mean, come on, we've seen Ready Player One. We know where everything's heading. It's obvious. It's not ready, but it will be. It's certain things I like to classify as a technological inevitability. It's inevitable. It's kind of like, Vine. Vine was dead. It's long gone. And Elon's been talking about it, but Vine is TikTok. So it's kind of the right place at the right time. If Vine was around today, that's what TikTok is. And TikTok is hot, but Vine was not. It wasn't the right time and the right place. So, 2030 is going to be a heck of a year, boys and girls. Let's wrap it up for the day. 27 people in the stream, 13 likes. I appreciate each and every one of you. Monday, December 5th at 1:23 p.m. Thank you all for joining. Tell everyone to stop by. Can't help people if they don't listen. After party on Discord for the most rational community in the entire crypto space. I truly appreciate everyone in there. I wish you all the best. I will see you again Friday. Peace.